Hey, this is Cary Smith, and I'm sitting here with Amar Shah, and we're talking about um, the three things that can totally blow up your financial plan. Right now, some of these things we might have control over, some of them might be out of our control, but nonetheless, they're things that we need to talk about and think about, right, to make sure that our financial plan can see us all the way through. So Amar, we've let's start with the first one, which is long-term care expenses. And we know that those can catch people by surprise. Everyone knows it's a possibility, but some of the statistics are pretty remarkable on the likelihood that a person might need care.
Yeah, I mean, there's the last statistic that I've read recently is 70% of adults over age 65 will require some form of long-term care. Um, for women, the average care is slightly over 3.3 years. For men, it's slightly above 2.2 years, right? So there's a lot of variables there. Um, and only 20% of residents in a care facility will require care for greater than 5 years, right? So a lot of variables there. I think the key thing here is that just not modeling long-term care in your financial plan is a big mistake. Oftentimes, when people do a financial plan, it's kind of like a rosy picture of certainty. We're going to live till we're 95 years old and will our money last us, right? It doesn't take into account, well, what if long term care happens 5 years from today? What does that scenario look like? And what does the scenario look like where 5 years before a normal longevity if we needed care, right? So if you don't die, you tend to need more help. It's just as simple as that. You know, if you don't die, you live longer. If you live longer, the likelihood of you needing help just increases.
It increases to your point, Amar, the likelihood of needing care is so high, and the expense, right, if you do need care, if it's full-time care, can be $200 a day. That's over $70,000 a year, right? So the likelihood and then the financial amount at stake is too high for it not to be modeled into your financial plan. Either how are you going to pay for it, or are you going to get long-term care insurance or some other way to make sure that you can cover those expenses?
Yeah, absolutely. I think that's a big thing there. It's just you may not find the perfect solution to pay for everything, but you should have some solution or some direction of what you want to see happen.
Absolutely. So the second one, Amar, is if one of the two people in the plan suffer a premature death, right? So if someone dies sooner than they had anticipated, based upon their financial plan.
Yeah. Here we see this in two different ways, how we see it show up in their financial plan. And I would say the first way is one spouse may have a lot of pensions, a lot of guaranteed income, or other sources that will definitely impact the surviving spouse if they were to pass away, right? So again, looking at the picture from two dimensions, one is if spouse A passes away or if spouse B passes away, what is the likelihood of benefit for the surviving spouse, right? Not likelihood of benefit, but likelihood of a successful retirement, right?
Right, right.
And it's not an insurance solution, right? Like this could also look at, what would the investments look like? Now that you may have been in a standard deduction situation, what does it look like to lose a standard deduction and be in a lot lower tax tables, right? So the tax rate that you're paying may be significantly higher, right? Which is an additional drag on your overall investments and your overall assets, right? How does that factor in?
Yeah, and this is a tough one, I think, for some people to factor into their plan. For example, if you have a couple and they're in their 60s and they're both healthy, it's hard for them to fathom the possibility of someone passing away in the next 5 years or so. So they tend to think longer term, right? They tend to think that they'll both be in their 80s, right, before this is a concern for them. But we know that it doesn't always happen that way, and which is maybe one of the reasons why this is missed in a financial plan, probably too often, and not accounted for.
Yeah. Yeah, absolutely. Again, these long-term care and, if a loved one were to pass away are not fun conversations, right?
Right.
But having those conversations and having a plan around them is definitely fruitful.
Yeah. The other one that I think we've both seen blow up people's financial plans is the assumptions that they made whenever they built the plan are no longer valid. Either the market has changed, or they might have just used bad assumptions to begin with, right? But sometimes the assumption in which your plan was based upon are no longer valid, and therefore, in a sense, the plan is no longer valid, at least to carry you through the rest of your lifetime.
Yeah, absolutely. And if we just think about recently, right? Like 3 years ago, interest rates were at 0%.
Yeah.
Right? So if you ran a financial plan based off of those assumptions relative to today, the assumptions would be slightly different. Now, a lot of these planning software or tools will say that, look, we're going back 30 years worth of data and we're using the averages, and that's how our plans are bulletproof. But there's a lot of variables that are not like textbook assumptions, right? Like spending, right?
Mhm.
On your plan, you could say like, yeah, we're spending X amount per month and X amount on discretionary spending like travel and stuff like that. But your reality may be something different than that plan. And making sure there's alignment between behavior and what your planning is very important to make sure that your plan is a valid plan.
Yeah, and one of the assumptions that I think that people maybe not have factored in a lot, and it relates to spending, and that's inflation. And so the things you're spending on may not have changed, but the amount that you're spending may be significantly higher, right, than you built into your plan. And although yes, we do use long-term averages, um, inflation and other factors, may be well above the long-term average and having an impact on a plan.
Yeah, absolutely, absolutely. There's also a component of sequence risk, right? Like so, like if you retired 10 years ago, the impact of these raising interest rates that are happening now has a different impact on somebody's plan than somebody retiring today, right?
Mm.
So that has to be factored in. So it's very important to update your financial plan, to do it on an ongoing basis. It's not just one and done. It's you have to make those incremental updates so you can see the trajectory that you're on or the path that you're taking, right? Oftentimes in our industry, we use a Monte Carlo simulations to say like, hey, you have a 90% probability of a successful retirement. That is just in that one case, right? You should also do that Monte Carlo to if there was a long-term care event, if there was, so you build up a database or a number of different scenarios and your probabilities of success, and then you track that over a period of time to see if you're still okay in those circumstances.
Yeah, if I can use an analogy, so a lifetime ago, before I was in financial services, I was a navigator on an aircraft carrier, and the sooner you realize that you're slightly off course and you make adjustments, right, the more likely you are to arrive at your destination.
Yeah,
And so the same holds true with your financial plan. If you review it frequently and make updates as needed, you're more likely to stay on course.
yeah. And be vulnerable to being open and honest with your plan, right? Like, I think that is a big piece of it is that like, oh, I don't spend that much, but the reality is you do, right? And
That's
so you
right.
want to make sure that that's correct in the plan. But
That's right.
hey, Cary, I think the best places to kind of go through these to avoid these mistakes, obviously subscribe to our newsletter. It's just once a month, and it has articles that relate to taxes, investments, estate planning, and charitable planning. It's a good place to get just information around what's going on in those places. but also we have a resource library on our website where you can go through and identify if you're in alignment. It's called the Next Best Decade Workbook that aligns your goals, your experiences, as well as your budgeting around those.
Yeah, Amar, I would just add, also, but you might feel like you just need to talk to someone, and you might want to just get a quick analysis of your financial plan, or if you don't think that you have a strong financial plan, to just establish one, feel free to reach out to us and give us a call, and we'd be happy to work with someone on that as well.
Yeah, absolutely. All right, thank you, Cary.
All right, thanks, Amar. See ya.
Yep, bye.
Bye.